So, welcome to the Never Broke Again podcast. We got, as Andrew likes to call him, Bobby Axelrod, also known as Rob Tamburri, CPA extraordinaire of the Atlanta area, here today with us. So, glad we have
He's
Rob
the
on.
Florida, Georgia CPA.
Thank you, guys. Yes, making Atlanta and St. Augustine tax smart and cash efficient, as I like to say.
Tax smart and cash
efficient. That's right. Got to think
Yeah.
cash flow. You can't think income. You could have the most profitable business, but if you're not cash flowing correctly, you may not live to see the day on those profits. So
That's awesome. So, Rob, hopping on here, maybe tell what have you been seeing with taxes so far this year, with like what people have been maybe struggling with, and then we can chat about how you ended up being a rock star CPA to make people. What did you say? I like that phrase.
I said tax smart and cash efficient.
Tax smart and cash efficient.
Tax smart and cash efficient.
So how are you making people tax smart with the IRS being in shambles?
Well, this is, the most interesting thing about this year so far is just the influx of tax documents with credits, leftover stimulus, the advanced child credit. It's definitely impacted everybody's refund. They forget they had the money 6 months. A lot of clients got those monthly payments. So when you go ahead and do the taxes, especially for those that are on extension, where's my refund? Well, you got the $2,000 last year. That wasn't stimulus. Oh, I thought it was. So there's a lot in the education environment that we consistently have to do because they view any money from the IRS, again, as stimulus because that's what people were used to. And then there's the ever-changing temporary rules, like, for those with kids, like daycare credits. It used to be you could make $1 million a year and you'd still be eligible for some level of daycare credit. Well, they changed that last year to give the lower income people more. So some of the higher income earners are surprised they're not eligible right now. However, for 2022, the old rules are back in effect. So now you will be eligible this year. So it's just constant education and having to explain things to clients, which really are low value because the time should be put in planning. And then you wind up spending more time just dealing with the rudimentary basics of the return, which is a big challenge a lot of CPAs have. And as far as this year is concerned, it looks like the Senate, that they just passed this new tax bill. I'm not even sure what's in it yet. So I'm sure I'll start getting calls about, how does this impact me, like with this minimum corporate book tax? It's going to be interesting.
I did read this article that said they were going to put a lot of money into the IRS. Have you heard about that?
Yes. And that's a good point, Andrew, to bring up because I've been telling clients this the last year. I was saying, everybody, the only thing the IRS and the Democrats and Republicans will agree upon is increased resources because, one, it's a bad headline play, and two, candidly, they need it. And so instead of raising taxes, they're going to extract more dollars out of existing taxpayers. So, yes, the way they're going to get money in to pay this is going to be on more audits. And candidly, the rates are so incredibly low, they should go up.
What rates?
The audit rates are all-time low.
Oh, yeah. They said that they're hiring 90,000 more
agents,
IRS agents over the next how long?
I think it's 18 months.
Okay.
Which means,
because you call the IRS, you can't get them on the phone. It's like impossible.
Well, right. And that's the low-hanging fruit. They need to do that too. I mean, even on our CPA practitioner hotline, I can't get through. But if today's August 15th, 2022, I would say by August 2024 is when you'll start seeing more audit notices going out because they have to be trained and it's very technical and they have to, the agents have to know what they're speaking about. So it's not like the audits are going to go up in 4 months or 5 months. I'm thinking about 2 years from now.
Well, it's for people audited. What are the odds of getting audited? I read it. It's higher if you're over 400, and it's like non-existent if you're under 400 in income. Is that accurate?
If you're a W-2 earner, generally speaking, what you're saying is correct. If you're a low earner and you claim the earned income credit, your risk of audit is very high because it's ripe for fraud. But they know, Andrew, that if you're over 400,000, every dollar they disallow, especially in an income tax state, is probably worth 35 cents on the dollar. So, if they take out some charity or travel and entertainment, which is very hard for clients really to take good care in their records, it's an easy win for them. I mean, if you're in a lower bracket and you disallow a charity, it could be 15 cents on the dollar. So that's right. But it all depends what your industry is and are you self-employed. So the example I like to use, if you're $1 million plus W-2 earner at Home Depot, they're not going to, they pretty much know you've paid in all your tax. And even if your charity is a little higher than normal, I doubt they're going there. But if you own a coin operated laundry, Matt, and you're making $100,000 a year, maybe you're making $200,000 a year, they'll probably audit you because it's a cash business. And those are two extremes. And then everyone else is kind of in between.
Who's this going to impact the most, Rob? Is it going to be W-2? Is it going to be self-employed? What are your thoughts on that?
It's my opinion it's going to impact the family-held S Corps and C Corps. And it's going to impact the self-employed with, I hate to use the word, but it's robust. It's an outdated word already, with robust Schedule Cs. So if you're, quote, self-employed making 80, 100, 150 grand and you have a lot of expenses there, they may say, let's take a look at that. Okay. S Corp salaries that are not high enough, easy to win on that. Okay. And C Corps, if you're not taking the dividend distribution and you're kind of leaving all the money in the C Corp, well, you better be a manufacturing company that has a lot of working capital needs. Otherwise, they're going to say, you really should be declaring a dividend and we want some additional money because you're not supposed to fill up C Corps with a lot of cash.
So you've got 400 clients, right?
Just about 400 tax
clients. 400 or 500 clients now. It's probably growing. But over the last 5 years, how many audits have you seen out of your clientele?
I have seen maybe a dozen paper audits, meaning they get a letter and they're requesting backup for one of the categories. So an example would be, we have selected your return, blah, 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 blah. We are asking questions about your business miles. Please submit your log within 45 days and we'll be in touch. So then what you do is you just follow the instructions. I've had one agent audit, I guess it was about 3 years ago now, where they basically sent the formal letter to the client. He had just moved to Maryland and they said, please bring in, the following records for these following year returns at 9 a.m. and go to see Agent Burke or whatever. And that was pretty scary. I mean, I did it via Zoom because I was here, but we were with them probably about 2.5 hours. They wanted to see.
What is that like?
Well, I tell you how well it went. There were some questionable items in there that we were aggressive on. All right. And I was getting ready to do my best to defend those. But after 2 hours of questioning, because my client's wife was so meticulous with her audits, not her audits, her statements and everything, every time the agent asked a question, she's like, hold on 1 second. Boom. Oh, you need this? Boom. So after covering some pretty good ground with the returns, he realized that her records were probably well organized. And he said, we're just going to put a no further action on this account. Thank you for everyone coming in today. But if we would have dug a little deeper, there would have been areas where we weren't as clean. But luckily, we didn't get there. So the key is keep good records, because if you constantly have those good records, you're going to increase the confidence to the agent that everything's all right. If you have no records, then they're going to be there for a while.
How was the demeanor of the agent?
They only come.
It's just a person.
Well, they come in two types. They come the good cop, the bad cop. This one was a very nice guy. He made you feel very comfortable.
Mm-hmm.
And I told my clients, that's all you're going to get. You're going to get the nice guy or the real meanie. And I said, don't put your guard down for the nice guy. That's just the way he's been trained. So a great question, Josh. It's either the nice guy or the you know what.
Mm-hmm. So what were they looking for in those statements? Just like proof of the deductions?
Yeah, well, this was a multifaceted one. They didn't like the fact that part of the year was on a Schedule C and part of the year was on a partnership. Okay. But once we explained the client got divorced and was no longer in a partnership and a one-person LLC is a Schedule C, he was comfortable with that. The supply expense was through the roof. It was an automotive repair and distribution shop, but it was a very large one. And this was even before the supply chain problems. And he just said that, he pretty much started ordering. The bottom line is we just showed a few Amex statements showing where all these supplies were, and he was comfortable with that. And then we went through about 5 or 6 categories, and we went into QuickBooks. We showed him the detail. I told him we do bookkeeping every month. So out of the gate, we wanted to show that our process and our procedures were clean.
Is there any benefit to having W-2 employees over 1099?
Well, first, there's a 20 rule test that will determine whether they should be employees. Okay. It's not black and white. Companies like 1099 workers because they don't have to match the FICA.
Match the what?
The FICA, the Social Security. Okay. When on your paycheck, you're only paying half of that Social Security. Your employer is paying the other half. Okay. Very rarely do I say the government does a good marketing job, but on this they do. Okay. It's 15.2%. Okay. So the real cost of an employee is a lot more than what you pay them.
Interesting.
So companies like the easy way out and say, we're just going to do a 1099, blah, 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 blah. The benefit of a 1099 for the contract worker is they're self-employed, right? They're not an employee. So they're able to deduct a lot of things that an employee cannot. All right. However, they're usually very lazy with their estimated payments, and they typically owe a lot of money at the end of the year. And that usually then causes a problem between the employee and the employer. I didn't understand how I was being paid. And then, so you run down a rabbit hole. And then if you terminate somebody on a 1099, they're not eligible for unemployment. And that is how companies get audited by the Department of Labor for unemployment risk. Okay. Because, Mary or Joe is upset they lost their job. Their friend says, go to get unemployment. They go down. There's no unemployment. Now they're really mad. And then the nice lady at the Department of Revenue will say, well, what exactly did you do there? And then it sounds like you're an employee. And then they go back, and then there's an audit to reclassify that worker as an employee, and then the IRS finds out about it.
Mm-hmm.
And Andrew, the main line there is control. If you control them, generally speaking, they're employees. Okay. If you don't control them, and the way I mean by that is like, I need these set of financial statements delivered to me by the 30th of each month, and I need these types of things. That sounds like a contractor relationship, right? You can take a 2-hour lunch, you can take a week off. I don't care. I need those things. But if I'm telling you how to do your job, when to take lunch, that, I'm training you in any way, you're an employee.
Is there any benefit to an employer having W-2 employees?
You can tell them what to do. Really? Financially, not necessarily. You get to deduct those expenses, but generally speaking, people are employees. That's what people are. We're seeing more contractors today in the quote gig economy, but mainly your workers are employees.
Mm-hmm. What if a contractor asks you questions and you have to guide them on certain things? Is there gray there?
No, yeah. I have contractors that work for us. I can guide them. And that's why it's never black and white. So if you have nothing better to do, Google IRS 20 factor test and you can see it's all facts and circumstances. I had a client, there's still a tax client. He lost an audit a bunch of years ago because he paid his pool cleaning people on 1099, and he was good on almost every area of the test, except for the fact he made them wear his company T-shirt on the job when they were cleaning pools, and the Department of Labor says you demonstrated yourself to the public that you're an employee. And then my client said, realistically, we did that for safety reasons, ma'am. I mean, you see a stranger in your backyard, who is this guy? Where does he work? He was a representative, didn't work, and he lost.
Mm-hmm.
So, yep.
So how do these insurance companies that have all these agents and insurance agents be 1099 work?
Lobbyists.
Politics.
Insurance agents have a separate designated area in the tax code by statute.
Does that include like financial advisors, mortgage brokers?
Yeah.
Okay.
Because technically, you're right. I mean, it's too much for the podcast, but insurance has always been treated very well. Real estate's always been treated very well in the tax code. But yeah, I mean, that's why the tax code is a gajillion pages long. There's exceptions and designations. Mm-hmm. You know, so like in Andrew's business. All right. The fact that he is, a real estate professional that meets the hours test, any real estate losses that he would probably have in an investment would be deductible to him, and it would not be deductible to you, Josh. Because I mean, it's a specific area, but what's that?
Yeah. So as most people are W-2s, I was reading somewhere that the IRS wants to tax people that are selling things at like garage sales.
Yeah, what you're hearing about this, and I don't know how it's going to work, and I'm quite alarmed about it, but it used to be on Zelle, Venmo, and things like that. You had to make more than $20,000 before they were required to issue any kind of tax document. That has dropped to $600 like any other 1099. So the question then becomes, if you buy me lunch and I want to pay you back and I Venmo you money, right? Or I'm giving my daughter tuition money for college, how are we really going to carve that out? There was chat about you're able to do that on your own, but I don't know anybody doing that. I don't know how to do that, and I have no idea what the documents are going to look like. So I'm quite concerned this tax season in that area is going to be a disaster.
What was that again? I've heard about this. What is it? The 20,000 down to 600? What is
yes,
that?
In other words, up till now, Venmo, Zelle, all those agencies were only required to issue 1099 NECs to transactions more than 20,000 in a given year. They've cut that to $600 like any other vendor. Like in your business, if you have a vendor that you pay more than $600, you need to issue that person or business a 1099 by January 31st. Okay.
So unless even if we go out to lunch,
unless it's a corp.
Like if someone goes out to lunch with friends and like they just Venmo them back, is that going to count?
It shouldn't. That's a personal expense, but it's through that, and I don't know how they're going to code that. I really don't. It's going to be a problem because I understand why they're doing it, because there's a lot of data. If I have a client that pays me by Venmo, I mean, it goes right into my bank account. I mean, I could put it in QuickBooks. I should put it in QuickBooks. I generally do. But what if I forget one? Well, now I'm going to get a tax document to remind me that it needs to be included.
Gotcha. And for anyone who may be going through like tax struggles with the IRS right now, how have you been helping people handle that, being that the IRS is so backed up now?
We only do one or two things. We try calling very early in the morning or late in the evening. That's your best chance to get through. I tell them, you can try on your own. And if you can get through, try to do a three-way with me, because I can't sit there for an hour to be disconnected. There's nothing that's quick. If it's a tax balance for a large amount of money where they know they owe, the real answer is they need to talk to a tax attorney, and tax attorneys have these magic numbers with direct agents where they can get a live person and negotiate the case for them if they know they're in the wrong and they know they owe the money.
Yeah. What do you consider a large amount?
10 grand, 5 to 10 grand, maybe 10 grand up. It depends the taxpayer. If you owe a little bit amount of money, then you could go into a payment plan, and those people, of course, are easier to get a hold of if you owe the money. But I dread when a client says we need to call the IRS together because, I know we have less than a 20% chance of getting through on any given call. So it's bad. Yeah. I don't understand how you can't have people answering the phone, and the worst part about it is they only accept faxes. You can't email the IRS anything. Well, I got to tell you, we finally got rid of our fax machines. I don't fax anybody. So, it's ridiculous. I don't know what's going to be, but this stepped up money is probably going to hopefully update the technology.
When does that money kick in? Do you know?
No, I didn't read the fine points. They just passed it. It's probably like.
Oh, that was in the Inflation Act. Is that what?
Yeah, the Inflation Act.
Okay.
Ironically, does nothing to reduce inflation.
I know, that's funny. It's got everything passed from what was the other Build Back Better?
You got we're
calling it Inflation Act now.
And again, I know about marketing, but and it's not even a political thing to say it's misleading. There's nothing in there that reduces inflation. Nothing. If anything, it's a spending bill.
Gotcha. Very interesting, Rob. Now talk to us about your practice.
Sure.
How'd you get started? How'd you grow it?
Well, sometimes mother necessity works. I lost my job back in 2009 in the financial crisis. There was not a job to be had. I looked, and my daughter was 9 at the time, and I said, you know what? Screw it. I'm going out on my own. I know I can make this work. But to the comment I used when I first started the podcast about cash flow, I said, I have no clue when I'm going to start making money or how long it will take me to ramp up. So I wanted to remove any concern of me not being able to pay my bills. So one of the things I did, which I recommend to clients, is, you start a LLC or a corporation for this new business. And if you have other 401k money, roll that money into your new plan and set it up in a way where you can borrow on your new plan to give you working capital. This way you're not paying that back with penalties and paying taxes, which is what I did. I don't want to say it was the secret to my success, but that was the first thing. I got funding in, and I said, okay, I have these many dollars to get started. So I wasn't worried every month, I can't pay my bills or I got to worry about that. Everybody doesn't have that luxury, but a lot of people do. And that's one of the things I would recommend to people to float to float your company with some equity. The second thing is you have to, in my mind, you have to get a very quick read on yourself, honestly, about what your strengths and weaknesses are. Okay. So luckily, let alone I'm technically savvy. I happened to attend my weekly sales meeting at my last company for 10 years. And I realized I learned a few things about selling. So I could sell and I could do the work, which gave me a quote unquote advantage. And that was a skill I didn't even realize I had. I just thought I was being the diligent manager by attending the meeting.
What did you learn about selling?
What did I learn about selling?
Yeah.
It's a transfer of emotion. Okay. Whether it's good or bad, you have to be able to connect emotionally with your prospect. You have to listen. And I really mean listen and then repeat back what they're saying. That gives people a lot of comfort level. You have to learn the differences when you're selling to spouses. You can't just sell directly to both of them. You have to sell to each of them individually, things along those lines. And you have to get an understanding pretty quickly on the type of person it is. Is it really a do-it-yourselfer who's kicking the tires, or is it someone that wants their time back? I'm using a tax return as an example here, that, they automatically trust you, right? And they just want the work outsourced, or is it really a do-it-yourselfer that needs to be stroked, and they want their own work? I mean, you kind of have to be able to read people a little bit. Again, and all the usual, Stephen Covey, begin with the end in mind. If we were sitting down here a year from now, what would make this a happy relationship? That makes them feel very good. I mean, I don't know how many people still do that, but I'm going back to 09, 10 when I first started out. That's not something an accountant typically would tell people. So, verbal communication. I think my biggest strength as a CPA is I avoid speaking in accountant language as much as I can. I try to put the prospect at ease, and I try to explain it in a way that isn't trying to show how smart I am.
Wouldn't you just want to overwhelm them with accounting terms so they just kind of are like, yeah, all right, just you do it?
Some accountants do that. I don't do that. I want them to engage me, that they really understand what I'm saying. Because if you do that, what's going to happen, Andrew, a year later, they're going to come back. And this is the very basic example. Rob, where are my payment coupons with my Schedule S Corp? I don't see any estimates. I want to make those payments. Well, you don't make estimated payments on the S Corp. You make them personally, right? And that is something we would explain to them in a meeting. I'm just being very top level here.
Yeah.
But, those are the types of things. And I still get it. Some of my very savvy clients will sign off on their S Corps in early March, and then I'll get an email, Rob, sorry to bother you, don't see the coupons here. Mary, remember, you pay that person. Oh, yeah, thank you so much, Rob. Basic education. A big problem we have is a lot of clients don't know why they are what they are. Oh, my friend told me to be a LLC. My friend told me to be a C Corp. Well, do you know that's not good for this reason? No. Sometimes they're embarrassed to say they don't really understand, but when you do tax planning and analysis, it's really it impacts them. So, I also like to ask clarifying questions. You got to dig a little deeper. So a great example I would give is, generally speaking, private school is not deductible, right? It's in the statute. But if you have a child with a learning disability and they have to go to private school, that's a medical expense. So
how do you prove a learning disability then?
Well, a psychiatrist sign off on that, right?
Yeah.
So if you're dyslexic and you can't be in public school and you need to go to a private school in a smaller class, and you have medical documents showing that this kid is recommended for a private school with a learning disability, that all of a sudden, that $25,000 a year tuition is a medical expense, and it's deductible against 7.5% of your AGI. Now, if you don't ask that question, you're never going to get to it. Oh, your kids are in private school. Nice.
What counts as a learning disability? Anything? ADHD, ADD?
If you're asking me, if the doctor signs off on it and it's not hocus pocus, it sounds good to me. It's like, is it a service dog or is it an emotional support dog?
Depends what course you take.
Well, exactly right. And then, there are a lot of service dogs that, in my mind, are really emotional support dogs, but they've been licensed and certified and they're okay. And by law, you can't exclude someone with a service dog, even if you don't want them in your place of business.
So how do you find your first client, Rob, after all this?
Well, now I'm really going to date myself. I put an ad in the local village newspaper.
That's dating yourself right there, just sharing that.
Well, is this in 2009 though?
2009, yeah. 2009. I did that. And then I also registered with BNI, which is Business Networking International. And I came up with my 30-second script. And I went every Thursday morning at 7:30. And the table would come around and I would say, hi, I'm Rob Tamburri. I specialize in taxes and virtual CFO services.
How do you say your last name?
Tamburri.
I didn't know it was pronounced that way.
Tamburri.
Tamburri.
Yeah, Tamburri.
That's like Canadian.
Yeah, like
Tamburri.
So anyway, and little by little, and then you go.
So who was your first client?
My first client was an elderly lady,
a little old lady
who found me in the newspaper.
who robbed Swindon.
Her accountant died. And she said, I've loved my accountant for 30 years, and I saw your name in the local newspaper. Can I come in and talk with you?
I love talking to people that are like, oh, yeah, I talked to I go, how'd you find that house? Such a good deal on the house. Well, I was renting next door, and this little old lady next door wanted to sell her house. Take advantage. I see that all the time in real estate.
And the irony of the whole thing, Andrew, that lady literally passed away about a month ago. Her daughter called me. We're going to be doing a final return for her. But yes, and it's a building process. And how I got my first CFO client was I had gone into the local BB&T, which is now Truist, and I just started talking up the relatively attractive bank teller. And I told her, I said, does anybody ever come in here with like accounting requests on how to run their business or need financial advice? She goes, no, not really. But, you never know. Yeah. And then about 2 months later, I get a call from this guy and tells me he got my name from BB&T. Apparently, he actually had gone in and said something about, I need somebody that's a little more than an accountant. And they connected us, and he was about a 10-year client until he sold his business.
Oh, nice. What kind of business was that?
It was auto glass and calibration services.
Did he tell you he was building it to sell?
Yes. Toward the end,
do you do accounting differently that way then? If somebody's building to sell?
Well, yes and no. In other words, when he told me that he was getting a little tired, I introduced him to a couple of business brokers, and he signed up with one, and they basically went through with us about additional things they wanted to see to make the business marketable. And then when we made those changes, he said that he was going to take the business to market. And then COVID hit. And then, he got their PPP money, and things were kind of like just stable for a while. Right. And then once things got a little better, he recontacted them and decided enough was enough, and he sold. So
would you write off less if you're looking to sell your company, though?
Well, we did a little of that. We removed some of the family cell phones. We didn't get the next service truck. I'm trying to think of some of the things we did. We reduced some of the compensation, and then we decided, we kind of, we weren't hiding anything. And then because anything that we changed, we basically put in the summary report. We kind of had to make things accurate, right? So one small partner only owned like 30% of the company. All right. And he was not nearly as multi-skilled as the majority partner. So we reduced his salary substantially on the reports on the business people, because that was an above market salary, but he was an owner of the company. So we try to get the dollars as accurate as they would be if you were buying the company, and then you figure out whether you needed to hire people. And anyway, so if you look at our website, we have our circle of services. Ultimately, if you're growing with these clients for a long period of time, especially the CFO clients, you're going to start out, and then a lot of times the people die or they sell their business, and it's a change of life event. You have to be prepared. Again, it's like nothing's forever. So then you introduce them to the attorneys, and then maybe a financial advisor if they're actually going to get a payout and they need help managing the money. But you normally have to prep a business 2 to 3 years in advance to the time when you're going to sell.
What are your, maybe like for the people, what are your like 3 favorite tax tips?
My favorite tax tip.
Does it exist?
Well, my favorite tax tip is, if you can't control your spending, okay, especially in this interest rate environment, and you're going to get a refund, okay, just realize that was money that you could have gotten all year, but because you have it in a lump sum, save it or invest it, okay? What happens is people say, well, Rob, I get $2,000 a year every year for a refund. I said, well, why don't you just divide that by 12 and reduce and change your withholding? No, I'm just going to spend it on garbage and things like that. That's actually a good tip, because it's a forced savings plan for people to say, put that into their IRA.
Well, I see a lot. I mean, I'm not saying everybody. I see a lot of people will go attempt to buy houses with that money.
Right. But the point is, years ago, when you were earning 7 and 8% in the bank, you were better off having it in the bank and making interest. In this low environment, even though rates have come up, it's actually a forced savings vehicle. So now I agree with some of those clients. Take it lump sum, but just do something good with it.
So what is your advice then? What is it to?
My advice is that if you and your spouse or yourself, if you're a W-2 worker used to large refunds, okay, work with a financial advisor or have the discipline to use that quote windfall for something constructive for your future. Okay, even pay down a mortgage payment, whatever. I find people, they just blow it. So that's
on
my
like
advice.
Louis Vuitton.
Correct.
I got my tax paycheck. Let's go shopping.
Yeah, and for business owners, and this is not self-serving because it's really not what we do, but you need a bookkeeper. Okay, your business starts doing well, and you don't have any real records of financial reports and things like that. Besides the fact you're going to get yourself into big trouble, you begin telling yourself stories on how the business is really doing, and it's the bones of the business. So lo and behold, you run into a company doing much better than they ever expected, and they don't even have QuickBooks or Xero or any kind of financial statements. That's money well spent. You need to have that. Okay. And then the other thing is, if you're self-employed, and it sounds obvious, don't be greedy with deductions. Is it really business use? Because as you see, the rates of audits are going to go up, and they're only going to go for the main areas, right? Meals, business miles, high charity. Okay. And you need to have records. And if you get audited, you will lose if you don't have that.
Can you use, obviously they want receipts, right? They want receipts, but can you just pull like credit card statements to prove these items?
Generally speaking, yeah, if you have a log with it. So it's like, if you have a dinner for $30 and you can show on your online calendar, you met with Jeff Bloom and discuss something, that's books and records.
Jeff
Otherwise,
Bezos.
Yeah, well, exactly. But you know what I mean. The point is, it's do you have anything? Okay. So again, and the other thing I tell people is always pay yourself first with the deferred retirement accounts, whether it's IRA, 401k. That's a direct tax savings. You're not going to miss the money. And if you can only save $50 a month, that's $600 a year. $600 a year in 3 years is $1,800. You're probably going to have an extra $3,000 in some investment account by doing nothing, by putting $50 a month in, and that's the beginning of it. So you gotta pay yourself first.
Pay yourself first. So
who does that apply to? Does that apply to just someone starting out?
Well, if you're just starting out, you need working capital before you can pay yourself. I mean, you got to get the business going.
Well, what if you have like multiple businesses? Like, is it better to reinvest the money back into the business if you don't need it, or just take the money because you want it?
Well, you have to
look. Seen with the
like you're an entrepreneur, you got to live poor, right, Josh?
Well, that's another great question, because businesses pay taxes on what they earn, not what you distribute. Okay, so you have to quickly figure out what your necessary monthly overhead is to determine what level of working capital you should keep in your company. But yeah, I mean, if you can pay yourself each month, start paying yourself. I mean, if you're a seasonal business, then make sure you have the working capital. My pool cleaning company, every time I talk to him now and I see how great his P&L's doing, his next words out to me, he goes, Rob, I gotta cover 2 of these guys through winter, because he has 2 great workers and he pays them 12 months of the year. Okay. And he needs the cash in the winter in that business. So he avoids distributions this time of the year until he really, really knows, what his numbers are going to be.
How many out of all your clients, how many are self-employed?
I would say 20% to a third. And that would be self-employed as a Schedule C LLC or an S Corp owner.
Do you help with exits for those companies?
I haven't, unless they retained us at the beginning as a CFO client. I have not had any tax clients that are just tax clients sell. So that hasn't happened.
How does a tax client differentiate from a CFO client?
Well, a tax client's transactional, right? I mean, we do the return. We probably have a year-end planning meeting to kind of chat about what life's looking like. Okay. That's a typical tax client. CFO clients, we become their outsourced CFO. So we're helping them. Usually there's some kind of problem. Rob, sales are up. My profits aren't up. My profits are up, but there's no cash in the bank. Okay. I bought all these assets for my business, and I don't understand how I could put them into my business on a tax effective basis. My credit's not that good. I need access to funding. I don't understand my insurance policies, and I do my own payroll. Well, we put them with a payroll company, and we'll connect them with insurance people to see if they can save on their dollars, again, to help improve the margins. And we become really their financial back office as it relates to higher level CFO work. We review the P&L each month with them. We ask them questions about, why is margins up? Why are margins down? And you'd be surprised. The big stuff they know, the small stuff they're surprised by typically. And that's really where the secret is. Everyone knows their health insurance, their rent. They know the big stuff. It's buying from the bad toner vendor that they're getting ripped off on their toner, or their IT expense is too large because they don't have time to really shop that around. And then before you know it, they're leaving 10, 15, 20 grand a year at a minimum on the bottom line.
How much is a CFO in a box?
It depends. Our minimum fee for like a quarterly review where the numbers are in pretty good shape, but they just want some guidance, is like $750. But most clients pay anywhere between $7,000 and $30,000 a year.
And do they get you monthly, or how do they get you?
Pretty much monthly. When you start out, I mean, there's more time, right? I mean, we see some clients as much as necessary to kind of get them up and running. But most of our clients now are monthly meeting clients where we Zoom and or meet at their offices and, sit with their bookkeeper and, go over the P&L for the month and discuss the financial issues. Do I lease that equipment? Do I buy the equipment?
And these are the CFO clients. They have exits.
Well, they all have an exit yet. Just some, if you maintain a relationship with us and you're around a long time, that probably will happen. So like some of the CFO clients we have now, we have one guy that's a 10-year client, right? But he is already transitioning the business to his kids. All right. And then some of our other clients right now, they're still young and they're still working. Down the road, they may want to transition. They may want to sell.
Have you ever been a part of an exit for one of your clients?
Well, the one we spoke about, I mean, I didn't actually do the exit. I introduced them to the exit planner and the business broker. And I kind of helped them get the financial information in an order that made sense. So yeah, I was part of it.
Wait, which one was that again?
That was the auto company, the auto glass calibration company.
Mm-hmm. Is there a point in time you recommend someone sell a business?
Well, there's a million answers to there, but I go back to what I said before.
That's a loaded question.
You have to sell. You have to think about selling the business 3 years before you're ready to sell. You can't wake up. Most businesses are not in sellable form for various reasons. Okay. Although I'm not a lawyer, one of the most interesting things that I see is because the client thinks because their name is registered with Sunbiz or the Georgia Secretary of State, they own the name. Oh, I own this. It's our name. No, you don't own the name. And if the name is very valuable in your business community, we will connect them with an intellectual property right attorney and trademark the name or copyright the name, whatever that vernacular is, to protect the name, because the name a lot of times is a driver of the sales.
Do you think that we all derived from monkeys?
Yes, I do. Yeah.
Where did that question come from?
Big Bang.
Just looking at myself.
Are you looking at the monkey behind you?
Ooh, that might be it. That's like my subliminal message. Maybe I gotta move the monkey.
And the other advice I'd give people trying to start a business too is that, buy the better thing as you can afford it, like on tax software. All right. Don't just get the cheapest tax. I mean, that's
what tax software do you recommend?
Well, we use Pro Series Intuit. It's very popular now. It was popular when we opened the shop here, but it certainly wasn't the cheapest. And why I hired them wasn't because I wanted to pay more. I was very concerned.
How much is that?
It depends the package you get, but probably in the neighborhood of $6,000 to $8,000 a season.
Oh, okay. This is really for accountants, though.
For accountants, but my point of the matter is, I easily could have gone with a cheaper product, and I probably would have done just as well on preparing a lot of the returns. The reason why I didn't is I wanted technical support, good technical support, because if my program freezes in March and I don't know anything about software, okay, I know I can get someone through. They will log on my system. They will help me. They will fix the problem, all included in that fee. And if I had a cheaper software, I'd be on my own. And if I'm down for a half a day, well, $300 and something an hour times 8, that's a $2,500 problem with angry clients. So it made sense to me. I got to know your strengths, right? My strength is I need that help. I know I need that help.
All right, let's get this wrapped up. We got Rob, the Florida Georgia CPA. Can you practice in any state?
I can practice in all 50 states for tax and for tax advice. I can only sign off on financial statements on the states that I'm licensed in, and that's currently New York, Georgia, and Florida. On those 3 states, I can prepare financial statements, and I can sign off saying these have been prepared by to the AICPA, and that's considered to be.
So you can do audited financials.
I can do audited financials in those 3 states.
Oh, right. Yeah.
Sure. They have to be a licensed CPA in those states. But as a CPA in any state, I can talk to other clients in other states and tell them I'm a CPA. I just can't hang a sign out in a state that I'm not licensed and sell myself. Like I can't go to North Carolina tomorrow and hang out and get myself a North Carolina address and say, hi, I'm a CPA. But I can hand out my Georgia card or my Florida card. Yeah.
Nice.
Okay. Thanks, Rob. Well, it was great having Rob Tamburri.
Tamburri.
It's like on the Never Broke Again podcast.
Tamburri. Like Pavel Bure.
Exactly.
And it's Rob, not Robert.
Is it Robbie? Is it Robbie?
It's Rob. To my mom, I'm Rob.
It's Rob. Rob Tamburri.
Yeah. So if you need an accountant.
Or a CFO in a box.
Or a CFO in a box.
We're going CFO in a box. So thanks for hopping on, Rob.
Thank you. Good to
see
you,
Rob.
Bye-bye.